Hey everybody, Economic Ninja here. Thank you so much for joining me. Today we're with Andy Schectman. I know you've probably seen the interview that we did a couple of days ago in reference to the silver market, everything that's changed with Wall Street silver, silver premiums exploding, now just recently a smackdown in silver, which hopefully you guys are starting to understand is an opportunity and not something to be bummed out about. We're going to talk about, actually, I'm going to introduce Andy, but I want to talk about what he wants to talk about right now. I think this is the most important thing I can do as interviewing people. You don't become a precious metals dealer and not understand economics. And Andy's been doing this for a long time. I'm sorry I'm long-winded. Andy, welcome. How are you doing?
Good to see you. I'm great. Thanks for having me. And you're not long-winded. You're fascinating to listen to. I've kind of been late to the party and been trying to catch up and watch a lot of what you have to say. And I think long-winded is good in your case when you have so much valuable information to pass on to everybody.
Thank you. Yeah, I say it all the time. I have the best subscribers on YouTube. And what's really exciting about this is I have subscribers that have just for the first time in their lives touched a silver coin or put some Bitcoin away in their own wallet. And they have true ownership of something. And they have an understanding that things aren't right. And so that's what I want to talk to you about today. We're going to talk about economics and the big picture. So Andy, in your opinion, what's the most important thing? If you were to run into a total stranger on the street and you wanted to talk to them, what do you think is the most important thing that you could share with them to teach them about the realities of life right now?
Well, I see a country and a balance sheet by the US government that is in, I think, disrepair. And I'd like to touch on that for a minute, and then we'll go back to 2017, and I'll show you a 4-year progression, going on 5-year progression of events that I believe the biggest money in the world understands. I was looking the other day at the United States balance sheet and really was blown away by it. You probably know the answer to this question, but I'll ask you. You know, we have, at the end of Q1, 2021, we had a $27 trillion debt, which is now already higher. That doesn't take into account Medicare, Medicaid, Social Security, government, military pensions. They'll tell you that exceeds 100+ trillion.
Oh yeah.
So we're 130 trillion in the hole by the US government's own admission.
Yes.
Kind of scary against a balance sheet of $4 trillion. That's it. 4 trillion. Do you know what, according to their balance sheet, is the largest single asset of the United States right now?
Gosh, I want to say, well, it's their student loan debt, I want to say. But
that's right. You're one of the first ones to ever get that. It makes me want to throw up to hear that. $1.58 trillion is the largest asset of the United States, student debt.
Well, and let me just jump in real quick. Now, think about this, people. They are saying they are counting debt as an asset. Now, if we have a shift in the economy of the world or even just our country, that means there are that many people that can't service the debt. So now what they're counting as an asset, and all of a sudden people can't pay, like rent and mortgages lately, all of a sudden that becomes a liability. But because of some interesting fundamental changes in the way that the government is allowed to account, not you, not me, not our corporations, but the government's allowed to count debt as an asset. So sorry, jump right back in. Andy.
Oh, I mean, it's you know, when you talk about problems with the US dollar and the US economy, that's one of them. We're the world reserve currency, the largest debtor nation in the history of the world, with an asset base of 4 trillion, of which half of it is the debt of our children. It's just absolutely ridiculous. It's 3 times what they take in tax revenue. Yeah. It's like buying a home these days. The college tuition is anyway, and it's getting so expensive. It's insane. My son is a senior at the University of Michigan. He's at the School of Business, and had he not gotten in to the School of Business, which is a very, very prestigious school, much to his credit, I wouldn't have sent him there because it's $70,000 a year. It's just extraordinary.
Oh.
And you know, how do people afford college? I don't know. And I think in general, it's a massive problem. I digress. Yeah. And they also talked about the Social Security. I mean, this is probably from a standpoint of economics. Yeah. It dwarfs everything else, I think. You have a $55.9 trillion shortfall in Social Security. Yeah. Call it $56 trillion underfunded in Social Security. And, you know, they talked about, even before the pandemic, that Social Security would run out of money in the early 2030s. But since the pandemic, you had half of the workforce out of work. So people paying into it have decreased, now it's coming back a little bit. But not only that, you have an environment where the trust fund themselves, the geniuses that they are, actually last year decreased the inflation expectations moving forward to 2%. Yet we have inflation now double that, according to the CPI, which we both know is really about half or a third of what it really should be. John Williams of Shadow Stats will tell us it's at 13%. He values it simply based upon 1980 metrics before everything was changed. And then we're at a point right now where they have to increase the Social Security cost of living payments in an environment where inflation is rising, yet the number of workers paying into it and their own projections are way off. They're already $56 trillion short.
Yeah.
And then you have a situation where the birth rate in this country is decreasing also. It's the assumption is 3 workers for every 1 retiree, but we're not even averaging 2 children per family. It's going down a very slippery slope where we are completely and totally unfunded, and we are going deeper and deeper and deeper into the hole. These are the kinds of problems that I look at that are plaguing the country that people don't quite understand or grasp. But I'd like to take that little bit of a tidbit, kind of an appetizer, and move to what I've seen over the past 4.5 years, because I believe the big money understands this. I believe the big money understands that we've accumulated the largest mountain of debt ever at the lowest interest rates possible. If you want to jump in there, go ahead.
Yeah, sorry. I think this is going to segue into what you're talking about. And it sounds funny, people. I want you to understand, you don't see any cardboard notes in front of me. I just talked to Andy, said, what do you want to talk about? So let's just talk economics, go. So I'm fired up. A lot of people say, well, hey, can't we just keep kicking this can down the road? And this is going to segue into what you're talking about in the 4 years. Why can't we just be like Japan? You know, they've essentially hit stagflation, and they're able to keep printing. I think we're at a quadrillion now or something like that with Japan. Why can't we just be like them? We are the world reserve currency. And if we want to hold that status, we still need to show other countries that there is value in purchasing our currency through either bonds, you know, straight fiat, things like that. So I want to show people that as Andy's explaining this, this isn't like every other country in the world that could, you know, keep kicking the can down the road for 20 years, 30 years, things like that. Eventually, these currencies all do fail, but we are in a very serious situation where we are the youngest, shortest lived fiat standard, the world's reserve currency in history. So hopefully that segues into what you're talking about these last 4 years, Andy.
Yeah, well, if you go back to like the 1400s, you'll see just about every single world reserve currency has a lifespan of between 40 and 50 years. When we left the gold standard in 71, we're already living on borrowed time. But if we go back to 71, we will see what I believe is a linear progression of events. And I think ultimately it ends, now people may disagree with me, but I believe it ends with the Chinese trying to attain world reserve status, maybe not singular, but to challenge us. So let me explain where I go with this. We go back to 2017. 2017 was a really awful time for gold dealers because you had gold at the end of a 6-year prolonged bear market. You had Bitcoin taking off, you had the Dow Jones taking off. And so you had an environment where precious metals were in fact largely being sold. 6 out of every 10 orders that we did in 2017 were people selling. My entire career, never seen anything like that. Typically 1 out of every 100 or 200 sales we do is someone selling, and it's been that way ever since 2017 and forever before. That was the one outlier year. In this environment, we're seeing central banks sell gold. And so everyone is shedding gold and talking about how it's an archaic relic. And this is when I was saying I was wondering if we're going to stay in business. The young people are buying Bitcoin. I had a gentleman working for me named Andy Hoffman, who was the hardest working dude I've ever met in my life. His idea was to bridge the gap between Bitcoin millionaires, and he was right. He was smart. He was ahead of his time. And gold, he kind of he moved so far away that he went into cryptocurrencies and chose another profession. More power to him. He was right, and I admit that publicly. I digress. 2017, some interesting things started to happen.
Yeah.
Out of nowhere, you get the German Bundesbank. This is number one. The German Bundesbank publicly says, send us back all our gold. They said that to the New York Federal Reserve. And at this point, when all the central banks are selling it, it made no sense. And they said, we want it back by 2020. And, you know, the reason, as a footnote, that the central banks would sell gold was because it was a tier 3 status item. And so tier 3 meant only 50% of the value of the asset was calculated on the balance sheet. Plus, cost money to store, it was unpredictable and paid no return. There were 4 reasons why they didn't want to hold it. That 50% haircut on the balance sheet would denigrate the ability to sell bonds, transact business. So they said, sell the gold, buy US treasuries. Well, that made the West happy, of course. So all the central banks are selling gold, but all of a sudden the Bundesbank says, no, send us back our gold. We want it. 2018, just a few months after the Bundesbank said that, the Bank of Austria, the Dutch National Bank, the Bank of Poland, the Bank of Turkey, the Bank of Hungary, they all started saying, send us back our gold too. Not just you, New York Fed, but also you, Bank of England. We want our gold back. And within a few months of that happening, out of nowhere, 180 degrees, all of those central banks bought more gold as a group than they did in the previous 60 years combined.
Yep.
So you go from net sellers of gold to massive repatriation and massive accumulation.
Yep.
2019 comes along, those numbers are up 90%. So the central banks go on a buying spree. From early 2018 through 2019, early 2019, they're copiously accumulating gold. April 2019, we find the Basel III reclassification of gold. Now, everyone talks about this new net stabilization ratio in the Basel III agreement. To me, that doesn't mean too much. Yeah, it talks about them getting their balance sheets in order and not counting unallocated gold the same as allocated gold. Yes, that's to me is noise. The most important thing from the Basel III, which is the most important development of my career, is that gold was reclassified as the world's only other tier 1 reserve asset on the planet. The only other one. And since 1944 Bretton Woods, there's been one tier 1 reserve asset, US dollars. Now, out of nowhere, after almost 80 years, well, let's make gold a tier 1 asset too, and not really tell anyone about it. We'll make it public, but we won't let Fox or CNBC or Bloomberg or anyone really talk about it, right? Well, maybe the Ninja will, or maybe Andy will, or maybe Bix will, but none of the mainstream is not going to talk about the fact that now the US dollar has a partner in terms of world reserve, number 1. So if we stop right there, in terms of tier 1, we stop right there, we can see first this progression of the central banks being cut in on the fact that, hey, in the next year and a half, we're going to reclassify gold. So why don't you repatriate it and start buying it when no one else is? Yeah. Then they reclassify tier 1. 2020 rolls along, and we see more of the same thing. The central banks are buying gold, but then for the first time, we see the rise of a third group of reportables on the Commitment of Traders report. As I mentioned to you, the draining of COMEX. Typically, when you look at the Commitment of Traders report that the COMEX market publishes, which is a report that just shows the positioning of the biggest traders rather, on the COMEX market, the big ones. Yeah. And it's always been 2 groups, commercials versus specs, which are hedge funds. The commercial banks, JP, Goldman, Citi, et cetera, the specs, the hedge funds. And it's a zero-sum game. One goes long, the other goes short, and vice versa. And typically the commercials win. But in 2020, all of a sudden, we see this third reportable. They are the others. And these others are thought to be sovereign wealth funds and family offices. And most of them trade on the highly private and super rich Globex market, where they have anonymity. No one really knows what they're all about. But what they have been doing is systematically draining the COMEX of gold and silver. Yeah. In 2020, they took more gold off of COMEX than the Bank of India or the Dutch National Bank or the Bank of Japan have as official gold holdings. Yeah. In 2020, they took 300 million ounces of silver off, as we said, a decade's worth of silver. At the same time, you see the International Monetary Fund on their website. They acknowledge this. This is a group that was also founded at Bretton Woods. The same time the dollar was anointed world reserve in 1944, taking over for the pound sterling, you had the International Monetary Fund incepted. And now they say, we want a new Bretton Woods. What that means, we want a new standard. So we want a new standard. So let's stop right there. We see the massive repatriation, the massive accumulation. We see the reclassification of gold. And then we see massive drawdowns off of COMEX by the most sophisticated private investors in the world. Do they know the central bankers? Maybe. Do they know the commercial bankers? Maybe they are wearing a different shirt. Who knows? But then we see the IMF say, well, wait, we want a new system. We don't want the dollar system. We want a new system. Could the fact that gold was reclassified tier 1 have something to do with this? I don't know, maybe. But here comes the biggest piece of the puzzle to me, and this is where I think it's all going.
Andy, can I just interrupt real quick? Let me break down the different tiers and Basel III requirements for banks for my subscribers. First off, imagine the different tiers, tier 1, 2, 3, being a bank's credit score. Now, when a bank in the middle of the night has to settle up with how much it lent out as compared to its deposits, central banks make these rules that you're only allowed to loan out so much against how much deposits. All right, it's a fractional reserve system. Now, in the middle of the night, a bank figures out, oh, we borrowed too much, we loaned out too much money, we need to come current, so we're going to go borrow. And I'm bringing this very simple terms down a couple notches. We need to borrow some money from a different bank. Well, what that bank looks at, one of the things is how in debt they are and what their assets are. So to put this in perspective, for a very long time, tier 1, the best credit rating you could have is to have US treasuries in your bank, right? So when you look to other banks and say, give me an overnight loan, they go, hey, they're stellar. Now it's gold sitting right next to the US dollar. And I want people to realize it's not going to be like that forever. You see, because we are seeing, like with Japan, with their largest pension fund, they're walking away from treasuries because they are understanding this 0% rate environment, which I believe will go negative soon. To keep trying to juice the system, banks and governments and family offices are walking away from US treasuries. So now I want to talk, you said the final nail almost in the coffin.
Do you believe that treasuries will go nominally negative?
Absolutely. I do, but I think it will only happen after a crisis, because the Fed wants to be in a position of the savior. They want to be in the position of, whoa, you guys begged for this, so we did this.
So before I get there, let's take this even one step further about what you just said. And everyone here knows about bail-ins, right? And the banks will bail in. I saw one of your shows where you talked about how they legally have the right to do that. One thing that a lot of people don't know of, at the same time they did that, they did gating legislations for money markets. So a lot of people who are in 401ks or figure that they'll stay out of a bank account, go to a money market. Yeah. If we went nominally negative, imagine you are a company that runs a money market, and where do you get your return? If the stock market's horrible and yields are nominally negative, not only real negative like we see not right now, but nominally negative, where do you get your return? That's called breaking the buck. And that's happened before, and everyone tries to leave the money market. In fact, one of gentlemen who I talk to a lot, who is associated with Miles Franklin, Dunnigan Kaiser, he had a money market in 2008 before the gating legislations went into effect, and tried to withdraw his funds, but was told you can't have access to them as that particular company was exposed and invested with Lehman Brothers. Yeah. It's frozen. So what they did was to lock down money markets at the same time. They put in bail-ins, they put in gating legislation. So just keep that in mind. If we go nominally negative, it is a spiritual experience for, I think, a lot of people in many respects. A lot better than, of course, if we go up, because with the inverse relationship between stocks and bonds being severed, they're now positively correlated to each other, and real estate. If interest rates go up, then you get the real bad experience. But let's talk about the final nail. Yeah. So are you familiar with the Chinese Belt Road and Rail Initiative?
100%.
Okay, so for your listeners out there who aren't, which I'm sure you've talked about it.
I have not talked about it, no.
This to me is the biggest event in maybe all of our lifetimes, and maybe I'm overreaching, but I don't know that I am. So before I talk about that, let me just first lay the groundwork. The Chinese, as you and I talked about offline, think in terms of decades and centuries. The US thinks in terms of days and weeks. So let's take a look at what the Chinese have done over the last several years. Number one, they built a SWIFT system with Russia and now the BRICS nations, a system that mirrors our SWIFT system that Russia developed, and they do together. Lots of Europe is signing on to it. This is a system that mirrors the SWIFT system being what the US uses to impose sanctions on countries they don't like. You can't get access to dollars, so you can't buy oil. It really puts the heat on you. So they're like, well, here, we're going to build a system that mirrors it so we don't have to be, yes. So that's number one. Yep. The second thing that they built was the Shanghai Gold Exchange. The Shanghai Gold Exchange, which has delivered over 90 times more gold in the past 2 years than the COMEX market, challenges the COMEX market, I believe, for at some point price setting of the West. Yep. Why have they delivered 90 times more gold? Because the third piece of the puzzle is the petrodollar. They have built a system to challenge the petrodollar. It's called the Chinese Petro-Yuan bond. They will buy oil from Iran or natural gas from Russia, and they will pay for it with a bond denominated in yuan, which is immediately convertible into gold on the Shanghai Gold Exchange. This is why Shanghai Gold Exchange, there you go. I love that billboard.
That's a billboard that's physically up. And just real quick, it says RMB, new choice, your premier bank of RMB services, the world currency, and it is a gold coin. So just to add to that. I've
shown that in a lot of PowerPoints I've done. Yeah. And so the Petro-Yuan bond allows these countries to usurp the petrodollar to sell their energy for it and then convert it into gold, which is immediately deliverable off the Shanghai Gold Exchange. This is why they've delivered so much more gold than the COMEX. And then, of course, infrastructure. They build 12 new airports a year. They build roads and bridges that are modern and brand new infrastructure across the whole country. They even build ghost cities, for God's sakes, so that their infrastructure is modern and up to date while ours is decaying and crumbling.
While we make fun of them for building ghost cities, like look at these idiots just blowing their money, and you're like, oh my, yeah, go ahead.
Well, and then the final piece of the puzzle, in my opinion, is the Belt, Road, and Rail Initiative. Now, this is another reason we talk about silver being so supercharged, because what they are doing, what they are attempting to do, for your listeners out there who don't know, is to embark upon the most ambitious infrastructure project in human history. This puts the Panama Canal to shame. Yes. You are connecting Asia and Africa, which is 70% of global population, human population, 70%. And 45% of global GDP before industrializing Africa and rural parts of Asia. They are doing it not just with roads and bridges and maritime channels and railways, but also digitally, which is one of the reasons why you have a massive, expansive use case for silver in and above the Green New Agenda and the batteries for Tesla. You're trying to connect 7 out of 10 human beings on this planet digitally. You need silver, right? But how are they settling all of these contracts? Well, they are settling all of these contracts. The majority of them, they are incentivizing all of the contracts to be settled in the new Chinese digital yuan. And in order to, they're making it worth the while of the people doing the contracts. And by doing that, you are indoctrinating 3/4 of human population into a new currency. Yep. Put it all together. You got the largest importers and producers of gold in the world who have built an infrastructure that can challenge the petrodollar, the COMEX, the SWIFT system, and have a better infrastructure internally and now externally. They are connecting 7 out of 10 people in the world. They are positioning to, when I believe the dollar is in big trouble and starts to go down that inflationary spiral, they will come out with their ace, pull it right out of their sleeve and say, well, according to Alistair McLeod, we have 38,000 tons of gold, not the 8,000 tons that the US has. Our government, the state of China has 20,000, the people have 18,000 tons. That's what Alistair believes. That would be 5 times what the US supposedly has. And we're gonna back our new digital yuan, which 7 out of 10 people understand what it is. We're gonna back it with gold. We're gonna show the veracity of those gold holdings on a distributed ledger. Maybe we'll have it independently audited in Swiss bank accounts. I don't know, that's all semantics. Yeah. It won't be convertible, but what it will be tethered to gold, so that now immediately overnight, the dollar is challenged for world reserve currency. And they have already built all the pieces, the pegs to do that like that.
Let me jump in there. So we're talking about stability in a currency, a national currency, and that is very important in a world that everything is inflating away right now because more and more currency is being printed. Banks and other governments are looking for a stable solution. That's why we see some countries going on to Bitcoin. Now, I want to explain, we're talking about nuts and bolts, like Andy has said. When we're talking about the Belt and Road Initiative, it's way more than just a new type of currency that's backed by gold or anything else. We're talking about literally the building of a highway. Now, if you guys talking about the East India Trading Company, if people don't understand what that was and how big it was, you need to learn about it, because when you own the shipping lanes, you own the world, because then you write the rules. Once you've built something that everybody uses, you can now adjust the rules. And that's what we did.
Like the world reserve currency.
Exactly. Yeah. We did that under, when FDR made gold confiscatable, when Bretton Woods came along, when Bretton Woods changed, which ironically, we're about to hit the 50-year anniversary, and 50 is a very important number. That China is building a highway, literally a 8-foot thick highway that only shipping vehicles and military vehicles can travel on, from China to England, right? Or to Europe. They're also building a rival to the Panama Canal. I want people to understand how very serious this is, because what will happen is they will show that their way of doing business, transporting goods, how you clear those goods as far as currency back and forth, interbank remittance, things like that, is better than doing business with the US. And that's what Andy's trying to explain here, and why people need to understand that. It sounds funny. I get excited, Andy, because when I'm talking to a camera by myself, I'm not able to jump up at a certain level until I'm actually talking to someone and firing off those ideas.
Well, I get it, man. And it's something that everyone should, I'd like to teach. My children are already a little bit older, 21, 17, and 14, so I can't tell them to go learn Mandarin, but people with young kids, that should be what they're teaching them. I'm not joking.
What Jim Rogers is doing.
Yeah, well, and it should, because I'll tell you, to me, it's very evident what they're trying to do. They are putting the pieces in place, while we're more concerned about gender issues and social issues, and we're ignoring the most important things in the world, and that is the future of this country and of the economy that our children will grow up under. And I just think that the Chinese are moving away from the dollar independence, and they are trying to put the pieces in place before they stand up and say, no, we want to be at the table too. And now put it all in the frame of reference with gold as a tier 1 asset. They're the largest producers and accumulators in the world, and by Alistair McLeod, and I think he's one of the smartest minds in this world, saying that they have 5 times what we do, even if he's half wrong. It's a problem. And if they come out and then revalue gold and silver to a peg level, that's when you get into guys like Jim Rickards saying they'll go to 10 or 15,000 and never come back down, because it will be pegged to a new world reserve currency. It's the only way I think you get credibility in a currency, is to have it pegged to something like gold. Now, people will say, what about Bitcoin? To me, Bitcoin's fantastic and has a place in this world, but it doesn't have the stability. When it moves so wildly, you can't have a currency where you buy a pizza for a little piece of Bitcoin, and by the time you're done eating it, you could buy a Porsche with it. So, you have to have something a little bit more stable. And the fact that they classify gold as tier 1, the fact that they're accumulating it and repatriating it, to me tells me it will have a significant role in what comes next. Now, people may say, what about silver? Is that tier 1? No, it's not. But it has a 90% correlation since the beginning of time with gold. As one goes, so too will the other, I believe. But what silver does have is indisputable qualities that are really very difficult to replicate, if not impossible, in so many of the things that we need in terms of electronics and solar and digital and all that kind of stuff.
And you know what? I think we're going to have to do another interview down the road, because I think silver right now is akin to the rhodium story, something that most people have no clue what it's used for and what it did in price this last year. So that is a whole nother interview that we should be able to do.
I'd love to. You count me in. And I enjoy talking to someone where I can, we can go back and forth like this. It's very For those of you out there who have these feelings, probably like you have for a long time until you got an outlet, it's a lonely existence having these feelings bundled up inside. You just want to help people, but more often than not, they don't want to hear about it. What you have done, and I give you kudos for it, is found a way to communicate to people that doesn't freak them out to the point where they just tune it out. And if you can show someone what's happening in a logical and easy, dumbed down way, and I don't say that as a compliment, actually. Dumbing something down is a compliment, because if you can take a complex issue and break it down so that your kid in high school can explain it to his friends or her friends, that's awesome. So that's meant as a compliment. But yeah, I'd love to do it. These are really important times. And I look at the Belt and Road Initiative and the Tier 1 asset revision of gold as the two biggest events of my lifetime, my career, for sure. And I think it will shape the future of this country moving forward. And then when you take a step back and then realize that it's transitioned into the biggest private investors in the world taking massive possession of metal, well, why isn't the price rising? Because people like commercial banks or institutions are able to, with impunity, dump 2 years worth of silver mine supply on the market when everyone's asleep, or 2 million ounces of gold on Sunday night when everyone's asleep. These are things that no one would ever do to maximize a return. They would only do it for effect. It's a drive-by shooting, and people should look at it as a subsidy, because I'll tell you one thing, the biggest money in the world does, and they're accumulating it, and they're using price as a cover and as a subsidy at the same time to reposition, to de-dollarize. And that's the important thing. It's not, you have to take a step back and say, well, why drive it down? That's the important thing. It's not being driven down just for shits and giggles. It's being driven down for reasons, to misdirect the narrative with price and to de-dollarize.
And I got to close on this, and I thank you for the opportunity to get my creative juices flowing. And it is easier when we're talking to other people. It sparks things. And you talked about being able to bring it down to a certain level. This is what, when you say needing an outlet, you're 100% right. Nothing worse than trying to explain Belt and Road Initiative, gold-backed currencies with somebody in line at the grocery store. And but the thing is you want to get this information out to people, and I wanted to bring it in a way that would explain to people not only how important this is, but actually the hope that you're learning about something before it happens. And like what Andy was talking about with the gold-backed yuan, this was a plan that was in play for actually decades and quite possibly a century, but we actually started seeing it in the news, not on Fox, not on CNN, but we saw it in the lower end news years ago when they were talking about Basel III requirements. They were changing their requirements together and watching what China was doing. And this is the hope that people could, not go buy a Starbucks coffee tomorrow and go buy a couple silver dimes, or, buy a little bit of Bitcoin. I remember when I was out trying to tell everyone to go buy Bitcoin when it was $500, or Ethereum at 50, or I was buying Theta at 5 cents, and trying to talk people into actually making money is ironically a very hard thing to do. So I thank you, Andy, for this opportunity to talk. I really appreciate it.
Likewise, man. It's awesome. It's awesome. I'm a big fan. And keep doing what you're doing. You're doing an amazing job and helping so many people. And I'm honored to be a small part of it. Any way that I can hop in and chat with you and your listeners, I'm honored to do. I will back that show in May. And give Miles Franklin a chance. Start by contacting me. My wife is going to be really pissed off at me that I gave out my personal email, because she doesn't like it when I work till 3, 4 in the morning, but I will do that for your listeners, just to prove what we can do, to show them that I'm serious, that we will hang in there with everyone. We'll deliver promptly. We're licensed, we're bonded, we're U.S. Mint representatives, never had a complaint. I'll make it my mission to take care of your people. And you know what? Truthfully, Ninja, you never realize how important relationships are until you have a problem. And then you can call and email and text, hey man, I got a problem, and it's done like that. And that's something we're good at, relationships. And
I totally agree.
And so, although I am giving in to the internet here very soon, I still believe in relationships and communication and old school. So I'm honored for the chance to talk with your people, to be here with you.
Yeah.
And keep doing what you're doing, man.
I love it. We're going to put the email below. Andy, I can't wait to share a stage with you in May. And just so you guys know, before everyone starts asking questions, we're not even going to sell tickets till January 1st. So, but we're going to go big. And yeah, we're going to go seriously ninja big with this one. I'm excited. So thank you so much, Andy. Have a great day.
You do the same. I look forward to picking up where we left off real soon. Stay well.
Right on. Everybody, the Economic Ninja is out.